Today I want to start with one sum on dissolution of a partnership firm wherein we are required to apply the decision of Garner versus Murray. Let us first read the sum. Aarti, Darshan and Komal are partners sharing profits and losses in the ratio of 2:2:1. The balance sheet was as under on 31st of December 2010 when the firm was dissolved. Firm is dissolved on 31st of December 2010 and we are given the balance sheet as on that date. Look at the details of balance sheet. Capital of Aarti and Darshan. Komal is also a partner, but Komal's capital holds a debit balance of 1 lakh. Goodwill, building, furniture, debtors, cash, profit and loss. 1 lakh is also loss. Debit balance 1 lakh. Creditors, bills payable, Aarti's loan, bank overdraft. Particulars regarding dissolution are as under: assets realized building 1,20,000. The book value of building is 2 lakhs, realized 1,20,000. Debtors 90,000, realized 60,000. Aarti agreed to take over the furniture at 40,000. Book value of furniture is 80,000, realized 40,000. Notice that all the assets are realized and loss is sustained. There is already existing loss on the face of balance sheet is 1 lakh and there is going to be a realization loss at the time of realization of asset, at the time for dissolving this firm, when this firm is dissolved. Now, Darshan agreed to pay the bank overdraft. Creditors and bills payable are settled at 90 paisa per rupee. Dissolution expenses amounted to 20,000. Unrecorded liability paid 9,000. Komal was declared insolvent and only 20,000 is recovered from her. Prepare necessary accounts according to Garner versus Murray's decision and pass the entries for Komal's capital deficiency. We are required to apply the decisions of Garner versus Murray. Now the precondition for application of a decision of Garner versus Murray is that one of the partners should be insolvent. Here we are told that Komal was declared insolvent. Now Komal is declared insolvent. Insolvency means what? Komal is unable to pay the debts and obligation, or the assets of Komal are less than her debts and obligations. Now, when Komal is unable to pay debts and obligation, the obligation of Komal towards partnership firm, this partnership firm wherein she is a partner, whatever the claims of partnership firm holds against Komal, she is unable to pay, or she has paid only 20,000, or only 20,000 could be recovered from her. Now what is the amount due or to be recovered from Komal? Let us just understand roughly. Debit balance 1 lakh. She has to pay 20% of loss of 1 lakh because her share in the profit is 2:2:1. So share of Komal in profits and losses is 20% and this 1 lakh is a loss, profit and loss account debit balance 1 lakh. Her share in that loss is 20,000. There is a debit balance of 1 lakh plus this 20,000. 1,20,000 is recoverable from her over and above. We have noticed that there is a realization loss. Building of 2 lakh, realized 120, debtors of 90,000, realized 60, furniture of 80,000, are they agreed to take for 40,000? So there is a loss on realization of asset and settlement of liability. See, unrecorded liability is also required to be paid. So Comer is required to pay 1 lakh debit balance, 20% share in this loss of 1 lakh, so 1,20,000. Over and above that, she is required to pay 20% of loss arrived at by preparing realization account. We prepare realization account at the time of dissolution of a firm to find out the profit or loss on realization of assets and settlement of liability. And it is apparent that there will be a loss in realization account. So she is required to pay 20% of that loss also. So against this total dues, 1 lakh plus 20,000, 1,20,000 plus share, 20% share in realization loss. Against that she brings only 20,000. So amount contributed by her is less than what is the amount to be recovered from her by the firm. Now see, amount recoverable from Komal cannot be recovered because of the insolvency of Komal. We can't treat this unrecoverable amount at par with bad debts. Bad debts means amount is not recoverable from a customer, from a debtor to whom the goods are sold on credit, and the amount is not recoverable from debtors, then it is known as bad debt. This is though not recoverable from Komal, but it is not bad debts. It is not a loss in the trading activity of the business. In business, normally we go for operating, investing and financing activities. And this amount which could not be recovered from Komal is not a loss of any of these three activities of the business. So this loss is not a business loss. And it cannot be distributed in the ratio of 2:2:1. That is the judicial pronouncement made by Justice Joyce in a decision of Garner versus Murray. So here we are required to apply the decision of Garner versus Murray. This decision can be applied when one of the partners is insolvent, means unable to pay the obligation. Partner's obligation towards the firm are not recoverable. That not recoverable amount cannot be treated as bad debts as per decision of Justice Joyce in Garner versus Murray. Then the question arises, do you mean to say that this capital deficit loss or this type of not recoverable amount from a partner, which is a debit balance of capital, we may identify this loss to be a capital loss? If this capital deficit means debit balance of a partner not recoverable. Bad debts means amount not recoverable from a customer to whom the goods are sold on credit. Here we have not sold goods on credit to the partner, and the amount is not recoverable from the partner, is a debit balance of capital account. And this unrecoverable debit balance of capital account is not treated as bad debts, but it is treated as capital deficit, or we may give the name to this loss as capital deficit. And this capital deficit, debit balance of capital account not recoverable, is not a loss of business, is not the outcome of any activities of the business. Activities of the business are operating, financing, investing, and this is not a loss belong to these activities. So this loss cannot be distributed in the agreed ratio for business losses. So this loss cannot be distributed in the ratio of 2:2:1. Then in which proportion this loss should be distributed? Then Justice Joyce in a Garner versus Murray case pronounced that such loss should be distributed amongst solvent partners in the ratio of their capital that existed on the date of balance sheet. He took the criteria of capital existed on the date of dissolution of a solvent partner for distribution of this type of loss. His intention was to recommend that the such losses should be borne by other solvent partners in proportion of their capacity to bear the loss. And how to determine their capacity to bear the loss? For that he selected the criteria that such loss should be distributed in the ratio of their capital of solvent partners existed on the date of balance sheet. One more thing also pronounced by Justice Joyce in this Garner versus Murray's decision was that the solvent partners are required to bring cash equivalent to the realization loss suffered by them. Now, after making this much of discussion and theory sayings, let me say in brief, when the Garner versus Murray decision is to be applicable, what are the important points that you should consider? 1. Find out the capital proportion of solvent partners at the date of dissolution. Find out the capital deficit of an insolvent partner. And that capital deficit of an insolvent partner will be distributed among solvent partners in the ratio of capital that existed on the date of dissolution. Over and above, one more suggestion is made by Justice Joyce in a decision of Garner versus Murray is that the solvent partners are required to bring cash equivalent to realization loss sustained by them. After making this discussion, let me start with the sum. Here I am going to prepare realization account, partners capital account, cash account, partners loan account. The sum start with the usual steps, but there are few changes which I am going to recommend or tell you while solving the sum. The first step for the purpose of solving the sum is to copy the balance sheet. Means all the details of balance sheet should be taken into consideration for accounting of this dissolution. How to copy the balance sheet? All the assets to be realized are transferred or debited to realization account. All liabilities to be settled are credited to realization account. Partners capital account are transferred to partners capital account. Undistributed profits and losses are distributed amongst partners in the ratio of profit sharing. This is how I am going to consider the balance sheet. Let me start. See, goodwill debited to realization account, building debited to realization account, furniture debited to realization account, debtors 1 lakh, bad debt reserve is credited to realization account. Cash balance 1 lakh, cash balance is 30,000. Comal's capital debit balance I write on the debit side, balance brought down to opening balance. Profit and loss account 1 lakh will be distributed in the ratio of 2:2:1. So, if this 2:2:1 ratio is applied to 1 lakh loss, then 40,000, 40,000 and 20,000 is the share in this loss of Aarti, Darshan and Komal. Let me distribute this 1 lakh in the ratio of 2:2:1. The amount debited to the partner's capital account is 40,000, 40,000 and 20,000. This is how I completed the debit side of the balance sheet. Liability side. Capital of Aarti 2,20,000, opening balance, that of Darshan 1 lakh. Creditors' bills payable will be transferred to the credit side of realization account. Aarti's loan will appear as balance, opening balance in Aarti's loan account. Bank overdraft is transferred to realization account. This is how balance sheet is copied. After copying this balance sheet, I suggest that a student should immediately find out the capital proportion of solvent partners because we are required to apply the decision of Garner versus Murray. So let me find out the capital ratio of solvent partners. Komal is an insolvent partner. Solvent partners are Aarti and Darshan. Let me find out the capital ratio of solvent partners as on the date of dissolution. Notice. Here, total of credit side 2,20,000 and total of debit side is 40,000. So credit balance of Aarti is 1,80,000. Same way I work out for Darshan. 1 lakh minus 40,000, 60,000, 18:6, or say 6 3s are 18, 3:1 is the capital ratio. Now if you remember, the profit sharing ratio of Aarti, Darshan and Komal is 2:2:1. So the profit sharing ratio was 2:2. But this capital deficit sharing ratio is 3:1. That's an important point to be noticed by you. So this is an additional step that one should work out after copy the balance sheet. Now the next step is to realize the assets. Realize the assets. Building realized 1,20,000. Cash account debit to realization account credit. Building 1,20,000. Debtors realized how much? 60,000. Cash account debit to realization account credit 60,000. Next point. Aarti agreed to take over the furniture for 40,000. Aarti takes the furniture. Aarti is the receiver. Debit the receiver. So Aarti's capital account debit to realization account credit. Furniture taken by Aarti. Aarti's capital account debit to realization account credit. Furniture of 80,000 taken by Aarti 40,000. Difference between the two 40,000 is a loss, automatically debited to realization account. Next point. We have realized building, furniture, debtors. What about goodwill? The firm is dissolved. One of the partners is insolvent. You are not told anything about what value realized for goodwill. In such situation, it is wise to presume that goodwill realized nothing. So nothing is realized for goodwill. So no entry is required to be recorded for that. Now, let me proceed to the next. Pay dissolution expenses and liabilities. Darshan agreed to pay the bank overdraft. Bank overdraft is 1 lakh. Darshan committed to pay. When partner assumes the obligation, partner commits to pay the liability of the firm. Partner is the giver to a firm. Credit the giver. So Darshan capital account is to be credited and realization account gets debited. Because Darshan committed to pay the bank overdraft. Journal entry, realization account debit to Darshan's capital account credit. Now, the creditors and bills payable were settled by paying 90 paisa in rupees. So 90% payment is made for creditors and bills payable. Let us sort out. How much are the creditors for the 80,000? 90% thereof, 1,62,000. Amount paid to creditors 1,62,000. What's the journal entry? Realization account debit to cash account credit. So cash account is credited for payment to creditors. Same way, bills payable 10,000. 90% payment is made. 9,000 rupees are paid for bills payable. Journal entry for that is realization account debit to cash account credit. 9,000 paid for bills payable. Now, what is next payment? Creditors, bills payable and bank overdraft is settled. Now, dissolution expenses paid. How much are the dissolution expenses paid? 20,000. What's the entry for that? Realization account debit to cash account, dissolution expense paid. Over and above, there is an unrecorded liability of 9,000 is paid. The journal entry for that is also same. Realization account debit to cash account credit. This is how all liabilities are settled. Dissolution expenses paid. Now assets are realized. Liabilities are settled. Dissolution expenses paid. Now let us find out the profit or loss on realization of assets and liabilities. Now remember, when we pay the obligation towards outsider is to be paid first. Then internal obligation means partner's loan is to be paid. So partner's loan, Aarti's loan, 50,000 is to be paid. So Aarti's loan account debit to cash account credit. 50,000 paid for Aarti's loan. All liabilities are settled. Now let us find out the realization loss. We know that loss is apparent. So total of debit minus total of credit. We get the loss of realization 2,20,000. This loss of 2,20,000 will be distributed amongst partners in the ratio of profit sharing, that is 2:2:1. Let us distribute 2,20,000 into 2,88,000. Share of Aarti, share of Darshan, 20,000 into 2 by 5, 88,000. Share of Darshan is 88,000. Share of Komal is 44,000. Notice one important thing. Here I am not writing the book. I am teaching the students. And as you know very well, when the teacher teaches, he never writes all details on the board. Here also, for the purpose of comfort in presentation, I am required to create such abbreviatives for the name of the partners. My intention is to teach, not to write the book, so please tolerate it. Now, this loss is to be debited to partner's capital account. Artist's capital account debit, Darshan's capital account debit, Komal's capital account debit to realization account credit to 20,000. This is how realization loss is distributed. As I told to you, when we are required to apply the decision of Garner versus Murray, the realization loss has to be brought in cash by the solvent partners. So, realization loss is brought in cash by solvent partners. Who are the solvent partners? Aarti and Darshan. What is their share in realization loss? 88,000, 88,000. That but cash is brought by Aarti and Darshan. Let me write down the entry. Cash account debit to Aarti's capital account credit. Amount brought 88,000 equivalent to realization loss. Same way, Darshan also brought 88,000. Cash account debit 88,000 to Darshan's capital account credit 88,000. So realization loss is brought by solvent partners as prescribed under Garner versus Murray. Now, record the entry for cash brought by the insolvent partner and find the capital deficit. So, Komal, debit side total is 1 lakh, capital balance debit, 20,000 share in profit and loss, 44,000 is the realization loss. Total amount recoverable from her is 1,64,000. Against that she brings only 20,000. So let us write down the entry, cash account debit to Komal's capital account credit 20,000. Now let us find out the capital deficit, the amount not recoverable from Komal at the instance of insolvency of Komal. Let us find out the capital deficit. This is the capital proportion that we have worked out initially. Here I work out the capital deficiency. Total of debit side, as I told you, 1,64,000. Total of credit side was 0. So amount recoverable was 1,64,000. The amount could be recovered only 20,000. So there is a capital deficit of 1,44,000. This loss on account of insolvency of a partner is not a trading loss. This type of amount not recoverable from partner is not a bad debt. Bad debt means amount not recoverable from customer. And this Komal is not a customer partner. The amount debit balance of Komal not recoverable is a capital deficit. And that capital deficit is to be distributed between Aarti and Darshan in the ratio of their capacity to bear the loss, which is identified as the capital balance as on the date of dissolution. And their capital balance as on the date of dissolution is 3:1. So this loss of 1,44,000 will be distributed in the ratio of 3:1. Share of Aarti 1,08,000, share of Darshan 36,000. Now this loss is to be suffered by Aarti and Darshan. Losses are debited to capital accounts of the partners. So Aarti's capital account debit to Komal's capital account credit. Here Darshan's capital account debit to Komal's capital account credit. This is how the capital deficit distributed among solvent partners in the ratio of their profit sharing. Right? No. In the ratio of their capital that existed on the date of dissolution. That's an important point to be remembered for Garner versus Murray. Now, Komal's capital account is closed. Total of both the sides is 1,64,000. Now we have to close the capital account of Aarti and Darshan. Let us do that. Total of credits is 3,08,000. From that, all these losses are deducted. So 32,000 is the balance left. That is to be paid to Aarti. Aarti's capital account debit 32,000 to cash account credit 32,000. So Aarti's capital account debit 32,000 to cash account credit 32,000. In case of Darshan, total of credit side is 2,88,000. From this 2,88,000 deduct 40,000, 88,000 and 36,000. So 1,24,000 is the amount payable to Darshan on dissolution of the firm. Journal entry for that is Darshan's capital account debit 1,24,000 to cash account debit 1,24,000. This is how payment or redemption of capital is made. After that, you should make a total of cash account. Both the sides should agree. If you are required to write the entry for distribution of capital deficit, remember the entry. Aarti's capital account debit 1,08,000. Darshan's capital account debit 36,000. To Komal's capital account credit 1,44,000. That is a journal entry for distribution of capital loss, capital deficit that has occurred because of the insolvency of Komal. I think you have followed this sum. Thanks to all of you.